Hello, welcome back to this week's market update. Today is Monday, August 11th, 2025, and we'll jump right in. Markets had a choppy but ultimately positive week as a new round of tariffs took effect on Thursday, with sentiment improving enough for the Nasdaq Composite to hit a new all-time high on Friday. For the week ending August 8th, the Nasdaq Composite led with that 3.87% gain, followed by the S&P 500 up 2.43%, and the Dow Jones Industrial Average up 1.35%. Looking at those new tariff rates that were enacted last week, they ranged all the way up to 41% on Syria here. Other countries like Switzerland, this 39% tariff was not expected, so that was a little bit of a shock for the country there. Other countries like India are some of our larger trading partners. That was up to 25%, and President Trump continuing to say that they might raise it even further, depending on India's reduction of Russian energy use. So lots of things at play here, but just taking a look at some of the highest new tariff rates as of the new rates last week. A little bit of a more important chart here. We have the effective tariff rate. So this is ultimately what matters most. It's the average effective tariff rate for the US overall. You can see we had a huge spike in them in early April when we had those very aggressive reciprocal tariffs announced and enacted for about a week before being rolled back. You can see then the effective tariff rate fell pretty sharply there, and it's been creeping up ever since with the announcement of further tariffs. So here we are, about a 19% average effective tariff rate, still significantly higher than the beginning of the year, but it does look to be a bit less severe than where we were in April. Also related to the level of tariffs, we got the updated information for the month of June last week in the trade deficit. It was a pretty sharp improvement from May, which was over 70 billion to just over 60 billion in the month of June. When you look at a longer term average, this is about the level that it was in 2023 before the tariffs were increased. And you can see this is settling down quite a bit from the trade deficit that we had in the beginning of the year as companies tried to import as much as they could ahead of the anticipated tariffs. Moving into our other recent economic data, we had the ISM Manufacturing Index show contraction again in the month of July, the fifth consecutive month of decline, down at 48%, a little bit of a drop from June's numbers there. Looking within the index, we had new orders continue to contract, employment continue to contract, inventories continuing to contract as well, the backlog contracting, new export orders also contracting, as well as imports. You can see a lot of the impact of the tariffs there as both imports and exports have been contracting, showing a little bit more of a protectionist stance in US trade policy. And then in the next slide, we'll take a look at the services index, which looks a little bit better for the month of July. The ISM Services Index came in at 50.1% in the month of July, signaling slight growth in the sector for a second consecutive month, but falling slightly from June's figures there. Within the index, we can see business activity continue to grow, but at a slower pace. New orders also were growing, but at a slower pace. Inventories growing at a slower pace. And then other categories like employment, that was contracting at a faster pace. And then imports and exports continuing to contract, showing some impacts of the shift towards a protectionist trade policy. So overall, we have the ISM Manufacturing Index in a pretty bearish territory. It's been there for several years. And then the ISM Services Index has been slightly positive to neutral in recent months. Last but not least here, we have over 90% of the S&P 500 having reported Q2 earnings, and the results have broadly exceeded expectations. As of Friday last week, the blended year-over-year earnings growth rate for the index stood at 11.8% year-over-year earnings growth, while revenue growth was at 6.3%, both significantly above the expectations at the start of this reporting season. Among the strongest performers were companies like Coinbase, Stanley Black & Decker, Electronic Arts, Allstate, Travelers Company, Hasbro, Regeneron Pharmaceuticals, Las Vegas Sands Corporation, Carnival, and Biogen. So you can see a pretty broad variety in the top 10 companies that had the strongest earnings surprises. So overall, very strong earnings season, much stronger than expected, and that has helped lead some of the equity market rally in recent weeks. So that concludes this week's market update. We really appreciate you tuning in, and we look forward to seeing you again next week. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.